Got some breaking news on the Fed, and Steve Liesman has those details for us. Steve.
Morgan, thanks very much. Loretta Mester, the Cleveland Fed president, making some comments to Reuters saying she would have preferred to hold U.S. interest rates constant in July, but does acknowledge, quote, it was a close call. Said it's hard to read a strong signal from the U.S. Treasury yield curve, but she is concerned. She says economic risks in the U.S. are weighted to the downside. The U.S. economy, Mester says, is slowing, but not in the same situation as the global economy. And one of the problems, she says, trade policy uncertainty having an impact on business sentiment. Now, just to be clear, she does say that the choice between holding steady or lowering rates. Mester, who is known as a bit of a hawk out there, is not inclined to be raising interest rates. Wilf, that may be just about the last monetary policy Fed speak we get until Jackson Hole next week. There are the minutes on Wednesday, but then lots of Fed speak next Thursday and Friday from Jackson Hole.
Steve, looking at all of this commentary and what you just said, what exactly does she mean when holding pat on rates is tightening policy in some circumstances?
Right. So if you should have a lower interest rate because that's where you are relative to the economy. In other words, if the natural rate is lower than where you are, then you're actually tighter than where you should be. So in that case, holding steady means that rates are above or restrictive in the sense of the current economy at the time.
It's going to be a fascinating week next week, Steve. We look forward to all of that coverage.
A lot
let's
to
get back
talk
to
about.